Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, May 3rd. Here with the Moose, CEO, Director of Fixed Income. We'll come back to me in a moment, and make sure you stay here because I want to discuss something for traders to keep an eye on and something for longer-term investors to keep an eye on. But we had fireworks in the fixed income market today, Moose.
Jeez Louise, Matt. We finally had a week that was decent in the bond market. I was tired of coming on here every week and talking about the grinding, rock'em sock'em trade-offs in the bond market, but the bond market continuing to lose ground. Different story this week. We had to start out the week with an employment cost index that was a little higher than the market expected. That 10-year bond yield hit a 470. And then things turned around. Jay Powell on Wednesday says, we're going to keep rates high, but on the short term, but we are watching. We think inflation will come down. That's what we're watching for. But he gave the markets a nice morsel, and he said, we are going to curtail some of our quantitative tightening, which basically means as money rolls off the Fed's balance sheet, they're not going to let the market have to replace it. They're going to replace it. And so this takes the tune of $35 billion. The market took that as a good sign. And then today we had the jobs number, which came in at 175 versus an expectation, I think, of about 217 or so. That was another good number. And the unemployment rate ticked up to 3.9. That puts some salve on the bond market, which, as we know, in April saw yields shoot up significantly. So you had a week where you're finishing the week right around a 450.
Yep.
Muni bond yields down maybe a third of what Treasuries are this week, mainly because they've been so sticky and not going up. So very good week for bonds.
Yeah, and we'll probably continue to see that grind in the bond market.
Absolutely.
I don't think you have to make a big bet either way. You have to trade what's in front of you.
Exactly. You trade what's in front of you, and I think what it does is it gives people some solace that, yes, inflation has been trickier this year. It's been a little higher than people expected this year. You were never going to have the smooth ride that people thought you were going to have at the end of the year. In any case, when people were talking about 6 rate cuts from the Fed, that was never happening. Right. But what you basically put in people's minds is that at the margin, things are slowing down, and that should bring inflation down with it.
Good. Couple things on the equity side. First of all, market backing and filling. A little dose of volatility. Volatility in terms of the VIX has come down a bit. What I'm paying attention to, broad indices right across the board, Dow Jones, S&P 500, NASDAQ 100. In the pullback, and it was only a 4, 5, 6% pullback depending on the index, we traded down through the 50-day moving average, but stayed north of the 200-day moving average.
Good channel to be in, yeah.
Traders like to pay attention to these moving averages just to give them a little idea about field position. Right. If you're down through the 200, bad things tend to happen. Held the 200, and now today we've traded right up to the 50. So it's an interesting juncture.
Yes.
Next week, do you trade through the 50, or does that act as a ceiling? Be very interesting, but it's funny how each index is trading identically in terms of those stochastics, moving averages. The other thing I wanted to discuss today is just a little glimpse into what we're doing research-wise here. You've heard me talking about industrials and basic materials, energy to some extent, really since last fall, where we're long and tactical and trying to get a little longer in our US ETF portfolio. Some really interesting numbers coming out, and I've included a link from Reuters and S&P Global below about the demand for electricity in 24-25. Right. Keep in mind, electricity demand has been flat for 10 years.
Right.
Due to efficiency, right? We're getting much more efficient with our electricity. But between AI, electric vehicles, people working remotely so they're on video all day long,
right,
electricity usage is starting to spike. Now we know when there isn't an awful lot of demand, there's no reason to expand to handle increased demand.
Right.
So what we're looking at is, we think, not only a trade, and we're long some areas to do well there, but a secular move here. We want to try to stay long those industrials, those grid builders.
Right.
You know, the companies that have backlog out 2 and 3 and 4 years. Remember, tech's been a great trade for years. Something has to complement it.
Right.
And we're seeing really solid performance out of these industrials. And I think an awful lot of it is on the back of that expanding footprint on our electrical grid, on our transportation grid.
Right.
You know,
and that electrical grid ties into the infrastructure spending that we're
yeah.
going to see.
So a couple, 2 or 3 names to take a look at, and we'll revisit them. And you can reach out to us if you need some help within your portfolio on these names. Take a look at GRID, G-R-I-D. Take a look at NLR, nuclear ETF, along with industrials. Take a look at URA. That's a uranium ETF. These are all areas experiencing demand, trading north of their 50-day moving average, really starting to take that next leg to complement tech and growth.
Right.
So, Moose, what's this weekend?
I just want to point out the fine tie our president is wearing. It is one of thoroughbred racehorses, and of course, we have the Kentucky Derby tomorrow.
Who do you like?
I like 2 horses, Matt. I really like Sierra Leone in basically the number 2 spot. And little piece of trivia here, no horse has won out of the number 2 spot at the Kentucky Derby since 1978. But that winner was affirmed, who went on to win the Triple Crown. The other horse I like is pretty far back, is in basically the number 18 position, Stronghold.
Okay, California horse.
As you know, I like the Santa Anita Derby winners, and he's won. He's about a 20-1 shot, so that's a little bit longer. But I always like the Santa Anita Derby winners. Who do you like?
Well, you know, Sierra Leone, your top horse, they'll probably go off as the second choice.
Yeah, probably 3-1. Yeah.
That's a closer.
Yeah.
He's going to be a dead closer. He'll be somewhere 18th, 19th, 20th on the backstretch,
Right.
and he finishes strong. Fierceness, who will be the favorite, runs up front. Fantastic back speed numbers. If he runs his race, will be very, very difficult to run with. I have a couple of horses I'm going to play with Fierceness. One is called Just Steel, and that's the old coach, D. Wayne Lucas's horse. I met D. Wayne in Saratoga 5 years ago. He's a legend in the thoroughbred business. Wonderful, wonderful guy. I always root for his horses. So Just Steel will be closing with Sierra Leone and a horse named Domestic Product. Both of these horses are going to be in the 15, 20, 25 to 1 range.
Right.
Domestic Product on speed figures is a little slow, but it's the way he's coming into the race, not being asked for an awful lot. He'll be closing as well.
He's been flying below the radar.
Below the radar, and Chad Brown knows how to get them ready.
Yep.
So have some fun. Remember, not only the Derby tomorrow, if you do like horse racing, there's 7 stake races on. Awful lot of fun. Enjoy the weekend. We'll see you next Friday.